Hours before its stock debuted on the nasdaq, SpaceX launched its flagship Falcon 9 rocket from Cape Canaveral, sending 29 Starlink satellites into low Earth orbit. On the ground, the financial debut was just as explosive. Massive buy-side demand delayed the start of trading for hours as the exchange worked to match orders. When the stock finally opened, it climbed 19% from its $135 starting price, closing near $161 per share. That single-day surge secured a final valuation of $2.2 trillion. To put that scale into perspective, this was 10 times larger than the previous record for a U.S. IPO debut, which was held by Alibaba in 2014. However, the momentum behind this valuation relied on a logic that wasn't immediately apparent from the launchpad. The public was betting on the future of space, but the company's internal projections told a different story. By owning nearly half of the equity in the new public company, Elon Musk became the world's first trillionaire the moment the opening trade cleared. His compensation package includes a specific provision. He can only unlock more shares at a discount if he establishes a Mars colony of 1 million people. This focus on deep space exploration resonated with retail investors, who placed a high volume of orders based on the company's established identity as a leader in rockets and satellites. But understanding why the demand reached such extreme levels requires looking beyond the hardware. It involves looking at how the company's core identity had quietly shifted before the first share was ever sold. In February, SpaceX underwent a structural change that was largely overshadowed by its launch schedule. The company merged with Musk's artificial intelligence startup, xAI. In its IPO prospectus, the company projected a total addressable market of $28.5 trillion. This figure represents the maximum theoretical revenue the business could capture across all its sectors. The breakdown of that $28.5 trillion figure reveals a surprising priority. AI projects account for 93% of the projected market, a staggering $26.5 trillion. The traditional core of the business, satellites and rockets, accounts for just $2 trillion of that projected opportunity. While the public image of the company remains tied to aerospace, the financial structure of the IPO was built almost entirely on its potential as an AI enterprise. The combination of this massive AI market projection and Musk's personal brand created an immediate surge of retail demand. The volume was so intense that it triggered outages on Robinhood and overwhelmed Fidelity's order processing systems within the first hour of the debut. The excitement wasn't limited to SpaceX shares. The positive sentiment helped lift the broader markets, with the S&P 500, the NASDAQ Composite, and the Dow all finishing in green territory. Adjacent stocks also saw immediate gains. AST SpaceMobile and EchoStar, which holds a 3% stake in SpaceX, both recorded double-digit jumps as investors looked for secondary ways to play the space AI trend. Speculation even spilled into unregulated markets, with SpaceX-linked perpetual futures on Hyperliquid seeing over $233 million in 24-hour volume. In a single day, the enthusiasm surrounding the IPO tested the limits of the retail market and influenced the movement of major indices across the U.S. financial system. Once the initial excitement of an IPO settles, the market typically shifts its focus back to historical performance. Data from Truist Wealth shows that many major debuts, including Meta and Alibaba, faced significant struggles during their first year as public companies. While companies like OpenAI and Anthropic are expected to go public with established business models in the AI space, SpaceX continues to trade on aspiration. Analysts note that its current valuation is based more on future potential than on its current revenue streams. For the company to maintain its $1.75 trillion valuation, the underlying math will need to change significantly over the next decade. Analyst David Traynor estimates SpaceX will need to reach $1.5 trillion in annual sales by 2035 to justify its current price. To reach that goal, they would need a revenue stream 50% larger than Amazon's current annual sales within 10 years. The IPO was a success in terms of market sentiment and rebranding, but without the fundamental revenue to back it up, any delay in meeting these steep AI expectations could lead to a significant market correction.